Welcome back to our training series on AI prompting for content creation in investment management and finance. So far, we've built a foundation with the 4 pillars of prompting, explored the models that respond to those prompts, and examined weak versus strong prompting through case studies. Today, we'll apply those lessons to a focused, high-stakes topic, writing about the Fed. Central bank communication is critical. It can move markets in seconds, and a vague prompt simply won't deliver professional insights. Take this weak example. Write something about the Fed meeting. It misses every pillar. There's no context, no role, no clarity, and no constraints. The result is predictable. The Fed met today and discussed interest rates. That's not client-ready. Let's rebuild it step by step, using the 4 pillars. Pillar 1, context. Always start by grounding the AI in the market environment. For example, ahead of the September 2025 Fed meeting, inflation remains above target while growth is mixed. Pillar 2, role. Next, define the professional voice. For instance, as an investment strategist, prepare a note. This ensures the draft reflects the right lens and tone. Pillar 3, clarity. Be explicit about what to cover. Fed analysis should explore scenarios, not just recap events. Spell it out, explain what happens if the Fed hikes, holds, or cuts rates. This shifts the output from a backward-looking summary to a forward-looking scenario analysis. Pillar 4, constraints and outcomes. Finally, set the boundaries and the format. For example, limit to 250 words. Or, present in 3 bullet points, suitable for an investor-client newsletter. Now, the AI knows the exact shape of the deliverable. Here's how it all comes together. With context, role, clarity, and constraints in place, the AI transforms uncertainty into professional-grade, actionable insights. The lesson is clear: weak prompts don't work for central bank coverage. Strong, structured prompts, built on the 4 pillars, do. And alongside the 4 pillars, there are a few supporting practices worth remembering. The first is adaptability. Think of prompting as a dialogue, not a one-off command. For example, once the AI drafts your Fed note, you might say, "Good start." Now add 1 sentence on how bond yields could react differently for 2-year versus 10-year treasuries. Each refinement sharpens the output. The second is feedback. Tell the AI what worked and what didn't. If the draft covers equities and bonds but skips the dollar, you can respond, rerun the note and include FX reactions in each scenario. By pointing out gaps, you guide the model toward more complete coverage. And the third is continual learning. Update your prompts as markets evolve. During a hiking cycle, you might ask, analyze how higher rates affect bank earnings and housing demand. But in a cutting cycle, you'd adjust to, analyze how lower rates affect growth stocks and credit spreads. The structure of the prompt stays the same, but the context adapts with the market. Together, these practices make your prompting more resilient and your outputs more reliable. In our final session, we'll wrap up this series with a checklist of best practices. Think of it as your quick reference guide to turning any prompt into client-ready content. See you there.